Welcome to our weekly Forex forecast. My name is Jay Norris. I teach trading at Trading University. As always, we need to point out that trading involves risk of loss and is not suitable for all investors. What we've done here is provide a real-time track record of our method's forecasting ability going back several years. Before we get to the charts, I think it's apropos to point out how Warren Buffett summarizes the Berkshire Hathaway investment philosophy. Spot on with how we approach things also. Couldn't have said it better ourselves. Our approach is very much profiting from lack of change rather than from change, and I think that's something that traders have to realize. We're here to take advantage of what the market's doing right now. We're here to take what the market's giving us. We're not here to try to predict what's going to happen tomorrow. First market we're going to cover is the Australian US dollar. We've been saying the same thing now for a couple of weeks. We think there was a strong possibility that you're sewing in a big double bottom here, and you had that now, and look at Friday provided a big update. So Aussie dollar trying to get its legs underneath it here, and we look at a continuation of this short-term correction, of this move higher. So at least over the very short term, we'll look at buying dips as far as day trades. Next market, the dollar Swiss. Dollar Swiss, you finally had a correction in this market. Here it is. That's the daily chart. You can see Friday, big down day for the dollar Swiss. We think that's maybe a little chink in the armor for the dollar. Had a big turnaround, big reversal, big key reversal on Friday, and we can call that a key reversal because it put in a higher high and then closed below the low of the previous candle. So you had a big turnaround there. Next market, the dollar index, and there it is. There's the daily chart. If I drop down to a 4-hour chart, you can really see the sideways movement that we've been in here, and generally that's not the easiest market to take advantage of for trend traders, and we'll get to that in a bit when we cover the euro too. But you're starting to see it a little bit easier too, to see it on a 4-hour chart where here's a lower high, here's a second lower high. So turn around on Friday, you hit resistance, you turn back around, technical indicators starting to roll over on that change of direction lower on the 4-hour chart. So this may be something to watch. You know, a sideways market at this point, let me pan out to a weekly, more or less just consolidation. Statistics will tell us that this movement here would be more consolidation than a market top, and we definitely agree with that analysis too. Nonetheless, nothing goes straight up, so odds are you're seeing a potential correction now lower for the dollar index. Here's euro US dollar, and you can really see that sideways action in the euro US dollar. Drop down a 4-hour chart, you can see it's kind of boring there, going sideways, and this is probably a good time to bring up our short-term benchmark. This is a reflection of the signals that our method provides. It's on the 15-minute chart on those lower time frame charts for the euro and the dollar index. For the most part, you actually saw we had a buy signal. First time we were on the long side in the euro in a while. Turned out to be a small loser. Overall, the performance is doing well. It continues to grow, the benchmark. On the other hand, you can see February a little bit choppy there. Look, you had 7 or 8 trades, 3 of them losers there. So that's what a sideways market will do to a trend trading method. But we're awful proud over the years how this method's evolved to where you look at the chart again from the beginning of the year, and you can see you had a nice trend move down, but you've been going sideways even longer than that. Yet look at the benchmark performance. So we're pretty good in trending and counter trending market. Very proud of that. Next market we'll take a look at will be gold, and we said it last week that gold coming up at an important level. It's got to hold that level. What do we say back here at the high there when gold was in that orange box? If there was ever a time to use leverage and take a short position in gold, it was right there, and that was spot on, and that's the method for you. Now you've come down $100 since then. Big sell-off. We don't mind seeing that. This critical area of the chart for sure. We think really if you bleed below 1190 or so, we think that opens the door to a test of the 2014 lows. And overall, when you look at a weekly chart, this is a bear market. So we would anticipate a move below that critical 1190 level to open the door to below those lows 1100 and beyond, and probably realistically 1000 would be a little bit longer term downside targets. for us in the gold. That's again if that band of support from 1190 to 1200 doesn't hold. Take a look at the Japanese yen, and here, we just don't see much of an upside anymore. Look at the daily chart. I mean, it's just not worth it to us, and you can see these big wide swings. Certainly consolidation, if not potentially distribution in there, as the dollar yen may be showing in a little bit longer term of a top for now. So potential is still out there for a correction in the dollar, albeit short term. Dollar yen, however, we think maybe that could be a little bit more of that, maybe a little bit intermediate term top, and anticipating potentially a secondary move lower. But again, markets can go sideways for a long time. We're not in the sell the rally camp in this market. Pretty much just kind of looking the other way on it. One market I wanted to show you, I wanted to cover, would be the 10-year note, because this is going to be U.S. interest rates. And this is why we're saying any backup of the dollar would just be a correction. Here's U.S. interest rates long term. You can see the U.S. 10-year note bottomed in 2012 all the way down at 1.3%. What's this right here? That's a higher low. So when it comes to interest rates, this is potentially the first higher low in a succession, in a long-term succession of lower highs. So if this in fact is a major trend reversal for U.S. interest rates, and the Fed is on record saying that, and you do get higher rates, that's definitely going to be supportive of the dollar rally. So that's why we're still very much in the dollar bull camp longer term. Shorter term, nothing wrong with looking at both sides of the market. Hey, thank you so much. My name is Jay Norris. Again, I teach trading at Trading University, and we'll be back again to see you next week.